Welcome back to the Before Passing Go podcast with your host, Michael Malfa. We're going to be covering an interesting topic. We're going to be talking about Canada's technical recession. And I'm here joined with economist Andrew Nguyen.
Thank you for the warm intro, Mike. Not much of an economist, but I'll take that.
And on the keys, we have Stefano.
Hey.
Stefano, I should be introducing you.
I like on the keys. The keys is fun because I am kind of on the keys.
There's some kind of keyboard.
I think we have to do it behind the scenes of all the actual work that goes into a podcast. A lot of people don't fully grasp. We were actually off camera. We were talking about how mentally exhausting podcasting is. Like, you got to be on.
Yeah.
You have to be mentally on. What about if you're not mentally on? It's not like you're building a house. You have to stay mentally focused on every question.
It makes you really appreciate when you see a lot of these content creators that are putting out so much content. It really puts things into perspective. I can really appreciate how much it takes, how mentally draining. You watch Steve Bartley. Like, I can only imagine his whole life is creating content and and his podcasts are like 3 hours long.
But it becomes mundane at one point, because for you guys, you eat, breathe, and sleep insurance. So technically, you can talk about it all day long if you need to. I mean, you really could.
True.
When it comes to me and everything I do, I mean, I could do this, and I do it every day, all day long. So I think at one point you say to yourself, like before we started podcasting, you said, well, I don't know, can we commit to it? But now here we are, how many episodes in, and it's not becoming as hard as it was when you first started. I know Andrew, he really didn't. And now here he is. He's an economist today with his glasses and all that, So now, guys, we're talking about something that the world is talking about. We haven't put in our 2 cents, but it's time to drop our 2 cents. And the title of this podcast is Canada's Technical Recession. Now, what in the hell does a technical recession mean? Andrew?
The definition of a technical recession is 2 quarters of negative GDP. And that's essentially Canada right now.
Now, a lot of people, they question it and say, oh, so we are in a recession. And your response would be?
A technical recession, not a recession.
Nice political answer.
What would classify us to be in a recession?
So, there's a whole host of other variables that they factored into the calculation to basically determine if we're in a recession or not. And that includes like unemployment. There's a bunch of other ones that I don't remember. I know unemployment being a very key metric in that calculation. Right.
Yeah, we track the things that we track. Yeah, you're right. GDP growth, unemployment. I don't know if inflation is counted in there, but that's one of the big metrics that Canadians are always keeping an eye on as well.
So one thing that we are going to add to this, simply because it was in our discussions, and I think it's a very important thing. How is this going to affect small to medium to large size businesses?
Yeah, in a variety of ways, really. Number one, sentiment. Like it creates a lack of sentiment from lenders that are putting out the money. Like, when you're starting a business, you have to have a strong business plan and you have to have a path to sustainability and profitability. So, if there's any doubt in that path to profitability because we're in a recession, and there's any doubt that the founder or the lender can get the business to a point where they can generate enough demand, supply and demand, and enough income to make it commercially viable, I think that starts to drive things up a little bit. And we were talking about that earlier, that flow of, kind of capital.
Yeah. And I think it's just going to make it difficult for small business to, especially some of the tech business that rely on raising capital, for example, from venture capital. They're going to find it being a lot more difficult because there's going to be capital flight. Like, people are going to look for opportunities in the US, for example, opportunities somewhere else where the economy is booming, right? Like, why would you invest in an economy that's just going through a recession? So I think, going back to what we experienced in 2008, that was the last recession, right?
Was that classified as a recession in 2008?
That was classified as a recession.
Yeah. COVID wasn't, was it?
No.
Should it have been?
Well, I think we got close, but I don't think they they managed to lower rates at a very rapid pace. Provided all these stimulus for people and small businesses.
But no one was working.
Yeah, so it's technically it's
Right?
artificial.
No, they weren't working, but they were spending.
Oh,
So consumer spending is a big item that we got to talk about, and that's the other piece of being in a technical recession. Spending drops down. Everyone tightens their wallets, tighten their arms shorten. Harder to reach the wallet.
Yep.
So that reflects to business owners, like what we see on the ground level. We see a lot of small to medium sized business owners, and we see their revenues shrinking. They're compressing now because consumers are spending less. I'll give you an example. We have one of our clients is a restaurant owner. It's a predominant restaurant. I won't say any names. Unfortunately, after 15 years in business, they had to close the doors down because they weren't getting the people there, the patrons spending the money. People are tightening up. They're spending less money. So yeah, it does affect. It really impacts small businesses.
now down the road though, if this doesn't improve, doesn't it directly affect you guys? Because if businesses are not flourishing
Yeah.
and might even be shutting their doors,
Mm-hmm.
kind of difficult to insure companies like this.
It affects everyone.
Yeah, it's the whole chain of it affects the whole chain, right? Like people are spending less, and that reduces the flow of money and the velocity of money flowing through the economy, and that's a very negative impact of a recession, and that's why governments, the Bank of Canada, they have to lower rates during these times
To stimulate.
to stimulate the economy, to basically inject new money, new capital into the economy to
Cheap money.
stimulate cheap money, exactly, to stimulate spending. So people upgrade their homes, buy new cars, go shopping, whatever it is to stimulate the economy. But we're in a very weird situation now where inflation is still lingering, and with oil prices and things like that are happening geopolitically around the world, that's really putting Canada in a very tough position, because if they were to lower rates and our counterpart, the US, don't, that's going to devalue the Canadian dollar. So now it erodes the value of our dollar. So it's a very weird spot that we're in right now. So
So I have to ask again. I get a technical recession is on the cusp of a recession. That's essentially, if we break it down to simplest terms, that's what it means, right?
mhm.
What is the fundamental difference between in a recession and in a technical recession? What is the fundamental difference?
Well, like I'm not like 100% sure on that.
And I ask
Yeah.
this because what's the stimulus
We can-
behind
I-
it?
We should look that up, Stefano. We should
And
look
I
that
will.
up. And
Yeah.
obviously, it'd be more than 2 quarters
yeah.
of negative GDP
Yeah.
growth,
So
and it would involve some other
yeah,
metrics.
unemployment. There's also like basically, yeah, it has to involve like unemployment, and I think what you mentioned, Mike, consumer spending
Mhm.
being another factor. So it's a bunch of variables that comes together that basically define what a recession is, and I think
Okay, I got it. Don't worry.
yeah.
All right, here we go. Technical recession.
Educate us.
A technical recession is 2 consecutive quarters of negative GDP growth. Thank you, Andrew,
Mhm.
because Andrew did say it. However, a recession is broader and more serious. GDP declining rapidly, rising unemployment rapidly, lower consumer spending rapidly,
Mhm.
reduced business investment near halting, falling economic activity across many sectors imminent and immediate. So yeah, there is a very significant difference. So technical recession means, hey, let's open our eyes a bit more. A recession means it's too late. It's here.
Yep.
That's scary.
Mm-hmm.
Now you said in 2028 and 2008,
Mm-hmm.
2008
2008.
was a recession.
Yep.
So do you guys remember what the fundamental pieces were to get out of that?
What they did was they essentially lower rates to stimulate spending, and that's kind of how we entered this, I guess, this phase.
Immigration.
Like
Immigration was how they was one of the main levers they pulled. So what they did is they opened up the policy on immigration, and they brought in, like, if we pull up the stats, you'll see all of a sudden Canada, it might have been a little bit after, because I don't know, I'm not sure when we came out of the recession, but definitely several years later,
2013
2013
roughly was when we
So
got out of it.
then the immigration should coincide with around that time, starting to really ramp up. And when you bring in immigration, the goal for Canada was, hey, let's bring in immigrants and, let's build homes and let's stimulate the economy through immigrants coming in, buying homes, buying housing, spending money, buying products, goods, services. That was one of the big ways, from my understanding.
Yeah, and I think they drop rates too, right? So I think
Yeah.
that was kind of like I know from at least from what I've seen in the past is that was when the start of these very low interest rates,
Mhm.
and people got used to that. It's like drug. It's like cheap money, right?
Yeah. Yeah, because then you start. You're right. You spend money, you buy, and then you can start spending more even on your housing.
Yeah,
You have low interest rates that just skyrocketed the price of homes, and we saw,
yeah,
yeah, after 2013, about 2016, and from 2016 to like 2020, the housing bubble happened. House prices were through the roof because it was very low interest rate money available. So it's like you're getting free money.
yeah,
So
yeah.
I will say I did some deep diving in 2008. Technically, the recession ended in mid 2009.
Okay.
However, didn't fully recover until 2013.
Yeah.
So essentially, that's what happened. But the only way it started to stimulate itself to back up on its feet was because the United States took the proper precautions and the proper stretches for homes and interest rates and jobs and all that to trigger our Canadian economy. So the U.S. helped us, apparently, as what it says. Now, I do want to ask you guys, what about the people? And I see this also as one of the questions. If the market isn't doing well and people are not insuring things anymore, okay, how are the insurance companies helping people to work through this?
Well, during a recession, insurance companies are at risk, and there's several reasons why. One of the reasons is, number one, premiums are shrinking. So businesses, as you know, your premium kind of correlates to your size of your business. What revenues are you doing? How much equipment do you have? How many employees? It very directly correlates to that. So smaller businesses, as businesses shrink, premiums shrink. Also, businesses are more conservative with their spending. They have to cut costs. If revenues are down, you start cutting costs. Insurance is one of those areas, and we see it. We've seen it more and more over the last few years. They're looking to drive costs down, and insurance is one of those levers. So insurance companies are not getting the premiums they're looking for. And then, Andrew, I think you want to talk about, maybe we should talk about the next one, the moral hazard, and
Yeah.
kind of like the claims side of things as well.
So, I guess during a downturn, there's generally what insurance companies worried about is their moral hazards, meaning, fraudulent activities increases.
Why? Like, just explain why
just,
would that increase? So a
for-
business owner is
yeah.
really squeezed.
Yeah, they're really
You know,
squeezed.
there's-
They can't pay their debt, for example. So you know what, tomorrow the business goes up in flames, right? And they can't operate anymore. And now they get the insurance proceeds from that. Right? There's an increase in claims activity, people looking for opportunity to make claims, like slipping and falling all over the place, tripping over things, like you start to see an increase in activity there.
Theft is
And
another big one, because
yeah,
people
theft
are
is
looking
another
for
big one.
ways now, creative ways to make money as well.
Mhm.
Not just the insureds, but also anyone, like they've got laid off their job,
Mhm.
or the people are getting more desperate to make money. So they're reverting to,
Mhm.
criminal activity. So
Yeah.
we're seeing a big uptick in vehicle theft, but also equipment theft.
So this also impact like small businesses that are looking for insurance, right? Like from a insurance company's perspective, they will underwrite for these moral hazards. So they will scrutinize things more. And I think at that point, it's just, it's very important that you have a good broker to really represent you with the insurance company, and really present you in good light, right? To make sure that you can even get insurance.
Even get insurance.
Yeah.
So that is essentially the first step. Can you even get insurance to begin with?
Yeah.
And you guys do that due diligence for them?
Yeah, and I think this is something we do very well here at Boardwalk, is that we represent the client. We make sure we present them well, and we ask questions. First of all, if a client walks through the door, we don't just say, hey, you know what, just give us your name, your number, and a little bit of information. No, we get to know that business. We truly get to know that business. We know who they are, how they operate, and then we present that to the underwriter. And now we act as partners with our underwriters. So we let them know exactly what's going on, make them feel comfortable with our client, because as if they know them. So I think that's really kind of where our strength is we're we're a true intermediary, and we represent the client to the insurance company.
And part of that intermediary, I think we also have to outline is that we're bringing the education to the client as well. So not only are we capturing the the information of their business and representing it accurately to the insurance company, painting the accurate picture, we're also giving advice, guidance to the clients like, hey, these are some of the exposures and how you're operating your business. These are ways you can mitigate those exposures. And it's not necessarily through insurance. It could be through different practices, different policies, different contractual obligations. So we'll look at their contracts, we'll look at their operations, and we'll actually give feedback to say, hey, you know what, let's minimize some of this risk. Let's tidy things up so you could sleep at night and your business is more sheltered from loss. And then let's take it to the market and get insurance on top of that, so you're fully protected and your rates are insulated.
Ooh, so we are not a technical insurance company. We are, or insurance brokerage. We are an insurance brokerage, because there are some people that are going to cut corners, but we will not cut corners. End of story. Period.
You got it.
Yep.
Right, Andrew?
Yeah, like you never want to cut corners. So it's something, I want my sleep at night.
They
so,
cut the corners on these tables though.
Yeah,
Pretty rounded.
They can do that, but in insurance, you definitely don't cut corners, because if you value your sleep at night, you don't want to cut any corners.
Yeah. And remember, it's not just insurance, it's risk. I think we got to really hit that home. We keep talking on this podcast, we keep talking about insurance. Insurance is a risk mitigation tool, but it's not the only tool, Stefano. There's lots of tools. When you're running your business, and you have camera equipment, you got to make sure you're protecting that camera equipment.
Yes.
Before it even goes to insurance. That's like the last resource, and the last stop is insurance when everything else fails, but you're locking up your equipment. You're itemizing it. You're taking all these precautions. This is just a small, simple example before it even goes to insurance. So that's where we could step in and really help give that. Well,
listen,
risk
you
guidance.
guys insure my equipment, just to be very clear. And this is not a plug for myself or yourself. I have it insured, as well as everyone should have their livelihoods insured properly.
Mm-hmm.
And I think that's the biggest point of why we do the podcast, is because I don't think people fully grasp the necessity and the need to get a brokerage or someone that is going to tailor the insurance plan directly to them. So in the event that they hit anything, like even some of the Toronto floods that have been happening lately, like they got to know, are they covered for these situations or not?
Insurance is your last resort.
Say that again.
Insurance is your last resort.
What do you mean?
I'll explain.
Yeah.
No one wants to have claims on their insurance. Do you wake up in the morning and be like, oh, I have insurance, so if a claim happens, I'm good? Yeah, it does give you a certain peace of mind. However, it's not a fun process. You're going through a claim. You've suffered a loss. You're going through the emotional loss of losing something. Could be your business, could be your vehicle, could be anything. Also, you have to go through all the energy and effort to get back to where you were before the loss. You have to put through a claim. There's deductibles. Then you get your settlement back, and now all of a sudden you have this claim on your record that could potentially will loom on your record for 3 to 5 years. So when you go to get insurance again, or you go for a renewal, that can be used to drive your rates up. It all depends. There's a lot of nuances to it. So I'm not going to say you're going to get a rate increase for sure, but chances are that claim is going to impact your insurance rates. And if you have too many of those claims, it's going to impact your insurability. So when we talk to our clients, we say, let's try to minimize the exposure to your business before it gets to insurance. And if all fails and all goes wrong, last resort, insurance is there when you need it for the catastrophic losses.
Mm-hmm.
We don't technical anything here. We do it right the first time. I like that word. It's a crazy word, right, guys? Do you believe in the whole term technical recession? That's how I want to end this episode.
I think it's it's definitely a word that you should put apostrophe around it. We're technically
here comes the
recession.
You just used it.
So yeah, it's definitely
doesn't
like
technically
open our
just mean
eyes.
we don't know. Like
Yeah,
we just don't know, but just hey, think about it.
yeah, exactly. I think that's really
It's
what
looming.
It's looming. It's on the horizon, kind of thing. So, but yeah, like just tying this back, I think we're in a very important time in Canada, and businesses are going through some crazy periods of time with oil prices, with inflation. We're faced with so many different problems. Tariffs. We just, I can relate to the business owners out there because we operate a business here, and it's tough. And I think if Boardwalk can come in, and any of our account executives can actually come in and take off that stress of knowing that, if something happens to my business tomorrow, this office, for example, that we just moved in, that is covered. That, hey, you know what, I'm going to be back into the same position and my business back up and running. I don't want to be thinking about anything else. There's so many things to think about already. So I can relate to a lot of business owners out there, and I think it's just, if this is kind of our priority, is that we want to take off that stress and off their plate.
Michael Malfa, at that camera, you tell them exactly where they could find you and Andrew.
This was a great podcast. I think it covered a lot and definitely took us out of our comfort zone talking about the economy. Hopefully it was beneficial and educational. So thank you everyone for joining us once again on the Before Pass and Go podcast. We're going to continue to develop curated podcasts talking about a plethora of different topics that relate to you. So thank you. Find us online at myboardwalk.ca, on Instagram and LinkedIn, Boardwalk Insurance. Andrew and I are both available there, and we look forward to seeing you again at the next podcast. Thank you.
Thank you.